Tell them about your nasty accidental massive trade. Bro, guys, I had a nasty accidental. Look at this. Let me show you guys. All right, so yo, you guys remember the trade from Asia last night that I was in? It wasn't really like a massive trade, but it was just the fact that it was accidental that made it funny. So you guys remember the trade that I was in last night, right? On stream, everybody remembers that? It was the long from the 15-minute fair value gap, 1 minute CISD, whatever, and it just wasn't coming back down to the upper 15-minute. Okay, so you guys know how I had a stop loss and a TP set for that? Okay, cool. So that stop loss and TP that I had set, it was not a bracket order, which means if one of them gets hit, the other one stays, right? So obviously, as you guys know, overnight, what ended up happening was that trade came all the way back down to my stop loss. It came down to my stop loss. So my stop loss order is gone, right? And my entry is gone, but my TP was still there. I had a sell limit at my TP, okay? Keep in mind, my TP was just a random ass area where I make $1,500 to pass consistency. That's it. It wasn't anything else. And bro, I wake up to this. I wake up to this, bro. I'm in an absolute top tick of doom, bro. I'm in a top tick of doom from my TP level. Bro, look at this. 0 drawdown top tick of doom. Yeah, that was accidental like 5K. That shit was hilarious. But yeah, it was on an eval, and I ended up having to lose money. So I literally closed that trade. I put 6 minis on, and then I was like, buy, sell, buy, sell, buy, sell, buy, sell, so that I could lose money. How do you stop that from happening? I've blown 2 accounts because the limit order was there. Okay, bro, there's a very easy way to stop that from happening. If you're taking a trade and you know you're gonna let it run overnight, you have to set a bracket order. Like you have to set one of the, you have to put like a long position, short position thing, and then create an order off of this and set a bracket order. That way, if the stop gets hit, the TP removes. If the TP gets hit, the stop removes, okay? Or you just stay up. Like you just have to stay up through the trade. You can't go to sleep. That's literally the only thing you could do. The outlook. Okay, let me do the outlook. All right. Obviously, I already did a weekly outlook. And yesterday we were looking for, yesterday during Asia, we were thinking that this was going to be low of the day because we hit the daily fair value gap. And then we got a 1 hour change in state of delivery to the upside coming out of the daily fair value gap. So based off of that, I was assuming that we have the low. The low is in. Okay, well, when New York opened up, that proved me completely wrong. The low was indeed not in, and we went and we made new lows, and New York AM was bearish. Okay, so I didn't trade New York AM today either because that's just against my higher time frame bias. Like I'm not going to sit there and short. So now we're on a new day, and on the new day, we're coming into this thing with a daily inverse fair value gap here. Okay, now in the grand scheme of things, this inverse fair value gap, does it mean something or no? Like, can you, if you are an IFVG trader, does this inverse fair value gap here mean anything to you? Yes or no? Somebody tell me. No, right? Okay, why? Why not? There you go. Thank you. No liquidity sweep, right? There you go. You guys are getting it. So this inverse fair value gap doesn't mean anything. This means absolutely nothing, okay? Can it still play out? Sure. Is there a high likelihood of it playing out? No. So the probabilities of this fair value gap, this inverse fair value gap playing out to the downside are pretty low, right? So it's not something that you would want to bet on as a trader. Now, had there been a sweep of this high here, had we went up and swept this high and came down, then this would have made sense, okay? And we could have actually shorted this daily inverse fair value gap, but it did not. So this inverse gap means nothing. Even if there's SMT, whatever, doesn't matter. It means nothing, right? And in this case here, we did not have any SMT with the S. This high is unswept. This high was not swept. I wasn't even going to go live tonight, okay, to keep it a buck. And the main reason is because obviously price action is doo-doo and it's the day before CPI. So it's not going to be good. This is the lowest probability day this entire week. Between the Asia session and the London session, those will be the lowest probability sessions the entire week, okay? So obviously we can't really put on too much size or expect like big movement from the market because it's probably not going to, right? Because we have the CPI event tomorrow. How do you trade CPI? First time hearing about it, brand new. If you're brand new, you shouldn't trade CPI, brother. I'll be honest with you, don't. Who does not know about the 1-day pass strategy here? Okay, I'll show you guys how to do a 1-day pass, okay? Okay, here we go. I'm going to show you guys how to do a 1-day pass, right? Let's pretend we are at 8:25 a.m. Eastern Standard Time tomorrow morning. Let's pretend it's 8:25 a.m. Eastern Standard tomorrow. 5 minutes before CPI, you are going to take your ass to the 5-minute time frame. When you are on the 5-minute time frame, you are going to identify the most recent swing high and the most recent swing low. That's number one. That's one way you could do it. Number two way you could do it is you take the swing, or you take the high and the low of the 8:25 a.m. candle itself. I don't like doing it like that. I would rather just take the swing high and swing low. Okay, cool. Once you identify swing high and swing low, let's say it's right here. That's the swing high, and this right here is the swing low, right? Perfect. All you're going to do is you're going to take the long position, short position tools. Okay, so you're going to take these and you're going to drag it out to whatever your max contracts you're allowed are is what you're going to put on here. Okay, so let's just say, for example, we're trading on Apex and the max contract on a Apex 50K is 50 micros. Boom. How much do you need to make? How much do you need to make? You need to make $3,000 to pass, right? So right here, you guys see $3,000, boom, and you remove the stop loss, no stop loss, okay? And you're going to set a sell stop, not a sell limit, a sell stop, right? Like this. So when you do that, it's going to show up like this. So your order is right there. Essentially what's happening is if the market goes through this low, it's immediately going to put you in a sell position, and then it's going to go to your TP and immediately take you out. Okay, so that'll be your sell position. And then you go to the buy, right? The long one right here, the swing high. And then you do the same exact thing, bro. Let me remove it. You do the same exact thing. 50, because let's just say that's the max. Buy, stop, and make sure this says 3,000. So 3,000, there you go. Remove the stop loss. Boom. Okay, now this is what this is going to do is as immediately as market goes up, it's going to put you in a buy position, right? But it's important that you use the max amount of contracts that are allowed. Max amount of contracts allowed is what you need to use, all right? Do not use anything less than that. Understand that it is a gamble and you may get slipped out of the trade. There's no argument that you can make to the prop firm that this is, oh, like, bro, it hit my TP, like slippage, but they don't care, okay? Because it is gambling. That's what it is. So understand that it is gambling before you do it. That's why I said if you're a newer trader, there's no reason why you should be doing that. You should only ever be doing this if you are somebody that has gotten payouts before and you're just trying to like quickly just pass a bunch of accounts. If you're a newer trader, don't do that. Trade normally, trade properly, and work your way up to the funded and the payout. Okay, don't pull some bullshit. But for whoever wants to do it, that is how you do it. Okay. Key, bro, why not just a buy limit? It has to be a buy stop, bro, not a buy limit. A buy limit above price fills you in immediately. You can't put a buy limit above price, and you can't put a sell limit below price. Makes sense? That's why it has to be a buy stop or sell stop. Eval trade, we're locking it in. We're locking it in. Eval trade, we are locking it in, boys. Let's go. It's a 9-point stop loss. Not bad, not bad. I like it. How'd you get a 9-point stop? Mine says 37 ticks. I don't know. It's just 1 hour WIC CE with the stop up top. I don't know. That's just how it is. Wait. Yeah, gang, that's correct. 9 points is 37 ticks. You little bozo. What entry model did you use? I'm literally just taking a 1 hour WIC CE. That's it. How do you know which WIC CE to target your entry off of? The ones that sweep liquidity. So it's going to be either one that goes into a fair value gap or something, or it's going to be one that sweeps a high or a low. Those are the ones you want to look for. I just want to know what a 1 hour WIC CE is. It's the midpoint of a wick. It's the midpoint of the 1 hour wick. It's sick. Which 1 hour wick? The last 1 hour. The last 1 hour. This one right here. This one. So this this trade is just from the midpoint of this 1 hour wick. Yo, it's been a while since I've done the wick lesson. You guys want the lesson on why a WIC CE works? I know a lot of you guys probably know about a WIC CE or the midpoint of a WIC or consequent encroachment and like all that stuff. Like you guys wanna know like the reason why that stuff works? I'll tell you the reason why it works. Let's do a mini crash course lesson on why those work and how the ranges are. Okay, let's go. So this is why they work, right? Let's say that you have a range in the market. All right, boom. This is your range. Anytime in any given range, what is the highest probability area for price to stop if it is retracing? If we take this range from high to low like this, the highest probability area for price to stop in this range is the 50%. It's the midpoint of the range. It's where premium and discount meet. It is equilibrium, okay? So anytime you're looking at a range, you're basically looking to, and let's say you're trying to trade this move, right? Let's say you're looking at this and you're trying to trade the move short, trying to trade the move down, okay? The best thing you can do is wait for a retracement into equilibrium, okay, or premium, and then a move down, okay? So this is just how ranges work. This is a nature of a range. Price will oftentimes retrace to the 50%, which is the midpoint of any range, and then it will go lower from there, okay? Vice versa for a bullish range, right? That's just the way that price is, okay? Price is going to seek the midpoint, and then it'll go. So the reason why it works on a wick is because a wick, when you look at a wick, all right, let's say this is a candle here. This is a red candle. Okay, so this is a down closed candle. When you look at this from a range perspective, you have your open here. This is a range, right? The wick is a range. This is a range right here. Okay, and then here's your body, whatever, and then here's your close. Okay, so the body, this is your body, and then this is your wick. Okay. So when you're looking at this range, that's why the WIC CE works, because the wick of a candle is part of a range. The wick is a range. Okay. So that's why that works, and that's why we use WIC CEs and midpoints of ranges and midpoints of wicks to get very, very precise. The intention is for them to be precise entries that don't have much drawdown, okay? Because how much drawdown can you really have if you are entering at the middle of a range? Just the top, right? And it's not like you're entering at the bottom of the range, you're entering the midpoint of the range. So you're going to have very limited risk. You'll have like maybe 10 points, 20 points of risk, depending on how big the ranges are. But you're never going to have that big of a range, right? So that's why we use midpoints of wicks. What about waiting for a liquidity sweep? How do we make logic of people saying we must wait for a liquidity sweep? Well, there was a sweep here already, right? So like the reason why we're trading this now is because there was already a sweep here. We swept these highs, right? We swept this high here. We swept this high back here into this fair value gap. So by the way, the only wicks that you can use, okay, the only wicks that you can use are wicks that swept liquidity. They have to sweep liquidity. So that means it either sweeps a swing high or a swing low, or it sweeps into a pity array, okay? Those are the only wicks that we use for WIC CE entries. That's it. Very simple. What do you do if wick range is large? Size down. That's it. Just size down. Thanks, Scott. I appreciate you. You wouldn't short a WIC CE if the stop would be 60 or 70? No. The question is, how would you manage that? No, I mean, I still would, bro. It's okay. So just because the range is big doesn't invalidate the setup, right? You would just have to size down. That's all. Like if this wick was a lot bigger, I would just size down. I wouldn't take it with a mini. I would take it with like 3 micros or maybe 5 micros or something. You know what I think the key to like building confidence in trading is? Like there's really one main key factor. And I think that's seeing the payout money hit your bank account. When the payout money hits your bank account, you get an incredible amount of confidence in yourself, because then it becomes real. It's not just numbers on a screen. It's not just a balance in your Lucid account or whatever account. It's not just a balance, you know, it becomes real. It's in your bank account. You could buy shit with it. You could do shit with it. That's when it's like, okay, this shit actually works. And it's proof of concept for you that not only was I able to achieve this, but my system works. So it gives you motivation to like keep going and that you're on the right path. The second you get your first payout, that's why like I tell people it becomes a snowball effect kind of thing, because the second you get your first payout, it's very easy to get a second payout, and then the third and the fourth and the fifth and the sixth and so on and so forth, right? So it kind of just continues on and on and on, right? Do you guys think that you're going to make money every single week, every single month? No, bro. There's going to be days where you don't make money. There's going to be weeks where you don't make money. There's going to be months where you don't make money. It's fine. It doesn't matter. It literally doesn't matter. Like in the long run, like you guys got to zoom out a little bit and think long term. Long term, everything is going to be fine. Long term, it'll all be fine. Does a red month or does a break-even month affect your year? You got 11 more months to trade. Does a red quarter affect your year? You got 3 more quarters to trade, right? It doesn't affect anything in the long term, like grand scheme of things. It won't affect anything. So it's all in your mind. It really is all in your head when it like affects things. It's all in your head. Why do I have the feeling always that I have to make it back directly? Bro, you guys just look, again, it kind of goes back to the long-term thing. Like you have to just be comfortable taking losses. Like very, very simply put, you have to be comfortable taking losses, because if you're not, then you're probably not going to get too far. Okay. In life, in general. It's not just here in trading. You're going to take losses everywhere in life, bro. You think people that are successful, like if somebody owns a successful business, right? Do you think the first business they ever started was successful like that? No, bro, it wasn't, right? Like you have to, the losses is how you learn. If you don't have any losses, how are you ever going to learn? How are you going to get better? You don't get better by taking wins. I promise you, bro, you don't get better by winning. You only get better by losing. That's how you get better. When you're winning, you don't change anything. Nothing. You don't need to do anything, because you're like, nothing's changed. Like my system's working. Why fix something if it's not broken? So when you lose, you have to actually make real changes to your trading, to your life, like whatever it might be. And that's when you improve, right? Just don't get discouraged, bro. As long as you don't, I tell you guys this all the time. If you don't get discouraged, and this goes for anything, this is just a general thing in life, okay? In whatever you do, it doesn't even have to be this. Anything you do in life. If you don't get discouraged, you can only get better at something. You can't get worse, right? How can you get worse at something? If you do it every day, how do you get worse? You don't, right? You only get better at it, okay? It will get to a point where you've lost so many times and you fixed so many mistakes that now finally you're at a point where you can make money. I'll give you guys a real life example, okay? I'll give you guys a real example. So it feels like maybe it might hit like closer to home, because it's not just me saying fucking word. Everybody knows Big Char, right? A lot of you guys might know Big Char. Charlie started trading with me. Okay, I basically taught Charlie how to trade. Charlie used to sit right here next to me and learned how to trade. Took his first trade right here. Now, Charlie made a good amount of money earlier in his career. When he first started trading, because he was sitting here next to me and like he was able to easily understand, because I was able to just explain things to him right away. He made a good amount of money earlier in his career. Now, I tell you guys this all the time, that every single trader has to go through the trenches. Really, anybody in life, anything you do, you got to go through the trenches at some point, okay? This kind of just goes back to what we were talking about. You have to lose. In whatever you do, you have to lose in order to win, right? He basically started winning earlier in his career, and I told him there's going to be a point where you start losing, and you need to be okay with that. And you can't let it affect you, because it's just part of the journey. Because every person is going to go through that. If anybody knows what he's going through now, he started losing. The day came. The day came, he started losing. And it got to him. And I had to like remind him, like, bro, like it's just part of the journey. You didn't lose early on in your career. You lost later. You're going to lose no matter what. You know, at some point you're going to lose. You just got to accept that. And just know that the losses will just make you better. That's it, man. I think the biggest thing is literally just discipline, and in life, like it's just discipline. That's all it is. As long as you're a disciplined human being, you can make it in almost anything that you do. Literally almost anything. You just have to be a disciplined human being. That's it, bro. Can you elaborate discipline in trading context, please? Not feeling the need to overtrade, not feeling the need to revenge trade, not feeling the need to chase trades, not feeling the need to move your stop loss, not feeling the need to average down, not feeling the need to make the losses back, not feeling FOMO, like all of these things, which all like the root problem is money, right? The root problem is money. Anything that has to do with money, okay? That direct relationship with discipline. That's what it is. You always got to remember, you don't get any smarter once you enter the trade, right? You don't get any smarter once you enter the trade. Whatever you guys are seeing before you enter the trade and that causes you to take it, stick to that plan. Don't go moving your stop loss. Don't exit the trade early. Don't move to break even early. Don't do any of that bullshit. Plan the trade and trade the plan. That's it, bro. That's it. Do you feel like trading Asia is harder? No, I don't think so. Some days Asia is obviously going to be garbage, but we know when it's going to be garbage. It was garbage. I told you guys it was going to be garbage before the session even started, you know? Predicting Asia and when it's going to be good and when it's going to be bad is very easy, okay? Garbage because of CPI tomorrow? Yes, garbage because of CPI tomorrow. Exactly. It's pretty easy to predict. If you have 8:30 a.m. news in New York, it's going to be garbage. If you don't have 8:30 a.m. news in New York, it'll be okay. The high or low of day will probably get put in Asia or London in the overnight session at some point. Hey, Key, I'm from South Africa. When you have stacked FVGs on each other, like a 15-minute, 1 hour, and or a 4 hour, which time frame do you use to enter off that FVG if it were to present itself? I would enter off the lowest one. Okay, so if we have a 15-minute, 1 hour, and a 4 hour, I would enter on a 15-minute. The trade is higher probability when the 1 hour, 1 hour to 5 minute gets, you know, a CISD. And then the trade would be the highest probability when we get the 4 hour to 15 minute. But I would enter off the lowest aligned.